Back to the Russell Journal. My name is Russell, and this is my journal entry for Thursday, December 29th. I believe this is 29th, 2022. I'd like to start out by, I'm looking right now at the live chat, and I'm loving this, right? I put out the title of the show, and they're already sort of holding my feet to the fire about what it is exactly I'm talking about, how I'm dealing with this, or how I'm managing this, or why would do these things, right? This is one of the main reasons I started this channel. So by all means, guys, please do it. Challenge me. Anything I have to say or do. That this is discourse. This is conversation. This is the thing that I want to get to. Is where we talk about things. I can have an idea. Maybe it's a bad idea. Maybe it's a good idea. Who knows? But I don't know until I throw it out there and somebody says, well, what about this? Or why would you do that? Or how is this? Where's your logic add up? So, again, by all means, keep this going. I appreciate it a lot. So thank you for being active in the comments and engaging the conversation. You will have to forgive me. I may have a bit of a delay. I have a visual impairment, so keeping up with the live chat is very difficult for me because I can only use my phone to do it, and that's very small, and I still want to have some type of camera presence. So anyway, going over today, first of all, obviously, got yourself a bounce here. Nice little push-up. Bit of a short squeeze action going on. You were pretty oversold down here. So that's not surprising to see this. I hope you made some money. Hope your calls were green today and printed you some money. I made some money today. I feel pretty good about that. I was pretty happy to come in and see, catch a real gap and go. I love a gap and go versus a gap and trap. That's something I really enjoy. So, not that, by the way, just so you know, if you follow Pureza at Shadow Trader, this is not that wasn't a true gap scenario. So if you're expecting to come back and fill that gap like a lot of channels are, normally it doesn't do that because it didn't actually open outside of yesterday's bar. So, again, that comes from Pureza. Maybe you agree or disagree with that. Again, use that live chat. I appreciate it. So. Let's jump into what I'm going to talk about as far as how and what I've been doing with this 3% rule. Now, this is something I developed back, again, a couple days ago. What I talked about was when I was trading penny stocks, the very first thing you want to learn to do as a trader is be consistent. And I watched a video. I don't remember the guy, his name, but he's really one of the sort of quote-unquote market wizards as far as trading goes, and I just remember the video was incredible, right? He had, so the video was, he's got this like in-home like sort of exchange built up where the guy literally has like 60 monitors plastered all through his basement, and he's got guys behind him, and he sits there and he watches basically all 60, and he shouts buy and sell orders to his traders behind him, and they execute on computers behind him the trades. And the guy legitimately is a real monster as far as like technical analysis stuff goes. And one of the things that he talked about for any trader really beginning is the idea of consistency. And where he talked about, he said, this was in sort of his top 5 rules for trading. And I'm going to find out who the guy is. I forget who he was, but I remember, and it was like 3 years ago this video came out. So I'm just, and I'm just beginning my trading career, and I'm absolutely getting my ass kicked. And so he puts this video out about if you have a goal each day. If your goal is $100, make your $100, cash out, and leave. Don't hold out for more. Now, where this is, again, especially with market culture, is it is counter to that concept, right? Because the concept of the rules of trading actually say cut your losers quickly and let your winners run. Yes, right? We can all agree this is something that you should do. Now, I agree with both of these rules, and this is where the 3% rule comes from, and taking profit at 3% or locking in at least a gain of 3%. Okay, and there's a couple of ways that and especially this is something that has worked for me when my account has been below $5,000. Okay, I've had accounts over $5,000 before. I've traded larger account sizes. Once I get between that $5,000 and $10,000 mark, I've found that this rule doesn't scale very well. But if you're trying to build, if you're say starting with $100 or $500, this rule works really, really well. I find for me again. This is also not something that I'm suggesting any of you do. Okay, I'm putting this out there as a point of order as to where my psychology is, where I found success, what works with my style, what works. We all have different styles, and we all have different comfort levels in the market. Some people are fine letting their profit sit and hang out there. Right, so there's a group of people who they'll do something like they'll buy, a double-sized lot order as far as like what contracts they're willing to do, right? Let's say they're willing to buy 10 contracts, right? They will sell 5 of them when they've reached a break-even point, and they will be able to let the rest ride and see how far they get. And they're comfortable wasting a day breaking even. Okay, if you are somebody, for me, that is hard for me to wrap my head around psychologically because I'm trying to build an account for trading with. I'm not having an account that is now supposed to be generating me profit, right? The idea, I cannot believe that I'm going to take my little $260 account now and start turning around $300-400 a day with it. I am trying to build this thing to where it's back around $5,000, and from there figure out what sort of income I can generate, right? So wasting a day by not taking that profit off the table immediately at some point is very frustrating. It's very wasteful. Having days where I lose a lot of money or lose those profits, hoping for the bigger move, not being able to get out of the way. Now, there's some stuff that we can do here, though, that allows for some greater success, okay? The very first thing that I like to do as far as risk management goes, right? This is something that came up in the comment section yesterday was, what happens if you don't make your 3%? You just keep force trading until you're down 25%. And the idea here is absolutely not. By no means, no. No. So the way you're managing this is, first of all, you're going to play, especially you're going to be looking early in the day. Okay, if you're coming in around 11 o'clock trying to do this this way, it's not going to work. This system's not going to work for anybody, for you. It has never worked for me late in the day trying to catch that. What you want to do is you're looking to, let me just stop. So I got to preface a few things. I forgot I was going to put this in there. So I have rule 1, which is be consistent. Have a consistent number. Lock that in every day, right? Learn to just be consistent, okay? That's a rule there. The second thing comes from, actually, I wanted to bring this up, was Patrick Boyle, okay? If you haven't seen Patrick Boyle on finance, I highly recommend you check out his channel, okay? Now, Patrick Boyle Finance, one of the books of his that I've read is Statistics from the Trading Floor, okay? Now, what Statistics from the Trading Floor said is that he talks about in that book, and he actually has a video he does about this, so I highly recommend you go over, check out Patrick's channel, but from his point of view, you never want any position to equal more than 20% of your account, okay? This is something that, so if you're starting with, say, a $100 account, you don't want to be buying contracts that are more than 20 bucks, okay? And there's some good news and bad news around this, okay? First of all, buying a contract that is $20 usually puts you between 3 and 5 strikes out of the money, okay? So this is a pretty good distance away. So you really have to have an eye on volatility. You want to keep an eye on the implied volatility of those contracts. So if you're not watching that on your options chain, it's going to make this a lot more difficult to do. But if you have a decent implied volatility, usually, okay, so normally you're looking for any implied volatility above, like, I think 0.7. But here with these lower ones, you can get above. I'm having success with the implied volatility above 0.4, okay, so around 0.4. There's a lot of success with that. The second thing that you can look at there that will sort of, you're really playing on here is you can justify a bit with the intrinsic values where you're, you can look for lower paying deltas and lower paying gammas, right? Like those are really it. You're looking to capture, and where you do capture, usually your 3% move isn't even really from the delta, it's from the compounding of the gamma on these. But even then, a lot of that also comes from, and that gives you kind of an idea as to where it's going to go as far as your contract goes. But overall, especially on 0 day to expiration contracts, the 0 DTE contracts, you're still looking at a place where most of your profit is going to come from a position of the extrinsic value, right? Traders chasing these contracts, right? Guys trying to do gamma scalping and things like that. So that's where you're going to get a lot of your benefit from is here. The cool thing about it is when you're playing these, especially if you catch them early in the morning, early in the session, is your there'll be plenty of money chasing sort of these lotto ticket type things. So you have a chance to capture 3% pretty easy, especially if you have a small account. If you're trading with $100, you really only need to see that contract rise by 3 cents, and you've made your 3% for the day. Okay. Now there's other things people want to do with it, but I want to catch up with the comment section really quick here. Anyway, yeah, let's try and just keep it friendly there. All right, so anyway, with that being said, the way this is how I'm managing it. And again, I'm looking to compound that 3% gain every friggin' day, okay? I'm looking for consistency. Now, the other thing that you can do with this that's really nice is as your account scales, as you lock in these gains and they become more and more consistent, one, this builds confidence in you. And then the second thing is it builds account size. And as your account size grows, you can move those strikes closer and closer to the money, and you can start to actually take advantage of this. The problem here is, and this is one of the things that I run into with trading a small account, and I've done this numbers of times this year, and I've taken $100 and tried to let my winners run, and I usually at some point either get chopped out or I get theta burned out, where I'm waiting for that next move up. So as far as my contracts go, I've not seen the let the winners run thing work very, very well on a 0 day to expiration. I've done much better by just focusing on these small little base hits, growing my account 3% a day. The good news is, if you think about it, if I'm focused at 3% a day, that's 15% a week. If I can hit that at 100% win rate, which again, that's very theoretical, so feel free. I know you're going to wreck me right here in the comments for saying that, because that's not super feasible.
Read it.
Yeah. What does it say? I bet it was it. You can. You absolutely can, and I have. The cool thing about this is there's a couple of ways to do it. Either A, especially if the move, is burning out, lock the gains in, whatever. More often than not, especially what you can do with Webull is you just set a trailing stop loss, and once you're up sufficiently, you just set your stop loss. You set your stop loss to that 3% gain. You let it run. Yeah, absolutely. It's not that I'm limiting myself to 3%, right? I had one trade last week where I made almost 40% of my whole entire account. It was like a very, very solid hit for me. If you go back to 2 weeks ago, almost 3 weeks ago now, where I started from my original $100, and now I'm up at like the $260. This is far beyond where I should be as far as like the compounding interest go, right? And the compounding things go. So I didn't stop. I'm not limiting myself to 3%. I'm just making sure that no matter what, I'm locking in 3%. Okay. I'm also not instructing anybody else to do this. Again, a lot of this has to do with my risk tolerance. Okay. It's not like my risk level. This is my risk tolerance, and where I am with my risk tolerance is the amount of time I am exposed to this market. And a lot of this right now is because I am very gun shy due to a lot of the stuff that happened right back in here. Okay, I will be the first to admit it. From a psychological standpoint, I got chopped out really hard through all of this. And so I definitely want to make sure that no matter what, I'm taking something home, right? I focus mostly on 3% of my account, okay? Again, if I do hit this, I do it right, I can maximize as much as 15% a week, okay? These slow, steady gains. And the other thing too is if you have a way to take a $250 account and blow it up, to $5,000 in a couple of weeks, please make a video, because I will come over and watch the shit out of that, and let me know how you're doing it, because I would love to find out where I can tighten up, where I can make things better, right? So far right now, I have had 3 weeks of steady winning because I'm locking in 3% no matter what, right? Now, again, like I said, you can make more. It's easy to make more. You just set your stop loss and make sure no matter what you lock in that much money. That's pretty convenient. I have had 2 trades where I kind of kicked myself because I didn't do those things. I didn't have that. This morning I could have easily made. A lot more. I had the 380 down here at 379. I ran in, bought the 383s for like $30, and when I checked on them in the afternoon, they would have been worth $1.10. So I would have tripled my money there. But I just locked in the cash right away, and so I do kick myself for that. I'd like to stop doing that one thing. I also had another one back in over here somewhere. From a week ago, where I would have I think I bought it for like $20, and like by the end of the day, it would have been up like 1,000%. But there is a bit of this where it's like I'm just trying to be disciplined, get my money off the table, get out, be happy with my win, be happy with my trade plan, right? I look at it, I go, okay, if we get this, it'll do that. I can get 3% and get out, right? And that fits in with my trade plan. So there's a bit of that where like that's what I'm looking for. So the risk is usually about $3. Okay, it's not actually a percentage. It's not a percentage of the thing. It's usually about $3. And the reason there's a little bit of versatility within this. Sometimes it's 4 or 5, and a lot of that depends on one price action. Okay. I'm typically determining whether or not a move is going to follow through or not through price action, and that usually determines whether or not I get in or out of the trade. Part of the benefit of trading 3 strikes out or 4 strikes out of the money, spending only between, right now my average contract is costing me 18 cents is what I'm paying, is that usually far enough away that you're not going to get just absolutely butchered in your premium losses. So I have taken some that were like $5 in losses, but usually they're no more than 3 as far as losses go, and that's just kind of a dollar figure, no matter what, and as of right now, again, this really sort of has the idea of having more winning days than losing days, which is also in a lot of ways counter to, that becomes sort of counter to some other trading strategies. A lot of traders will suffer minimal losses. They're looking for 9 losses that are minimal and 1 win that is big, right? That's typically the line of thinking. I haven't managed to make this work with a small account ever. Okay, I've never been able to do it because by the time you get to that 10th victory, you've lost some. You've basically limited yourself out to where I don't know if you played much poker, but eventually there's a way in poker, especially if you're playing like Texas Hold'em, you can blind yourself out, right? You can keep folding until you get the cards, but you eventually have to pay the blinds, right? And that's essentially what these guys are doing with their 9 losses and 1 big win, right? They'll blind themselves out until they have a hand that they think they can win, and then go big on the one hand they think they can win. It's the same thing with trading. Again, as far as like building a trading account from nothing, I've never been able to make that work. And to be honest with you, I think there's a lot of bad habits that do come with that, where, look, man, if you're holding contracts, let's say you went short right here, and you held through this, you hold this, why wouldn't you keep holding through that? Why would this candle over here be the one you came out on, and why didn't you come out on this one, right? There has to be some discernible reason or discernible point to actually come out, to take profit, to lock money in. And again, when you're looking to build up a small account, you're not swinging for the fences at all. You're trying to be very conservative, or at least I am. And again, like I said, I haven't figured out a way to really make this work out other than that. If I can figure out a way that I can let those winners run a little more, again, I could have been up, instead of being up, I was up like $10 today on my account, which is a pretty good win for me as far as I'm concerned. That's 7.5% from what my account size is. In a single day, that feels pretty good to me. And I've been able to do that every day this week. I haven't had a losing day this week. And as a matter of fact, right now, with what I'm doing, I haven't had a losing day I've had 1 losing day in 3 weeks. Okay? So again, not having those losing days is a huge help to my psychology. That's the other thing. So this is all stuff that's really personal to me. Again, if you have an idea as to how to fix it or how an idea to do more, yeah. So again, that's like I said, my risk is usually about $3. It's not usually a percentage. So that was the last question as far as that goes. And again, the videos here also, just want you guys to understand, I'm not an expert, right? I'm not the best trader in the world. I'm not doing this video because I'm the best trader in the world. I want this conversation that's happening between the live chat and me, I want this happening off. We don't have the conversation. And the conversations that do happen are toxic. It's like there's so much ego involved here. There's no conversation. So again, I focus on 3%. It's working for me right now. And until you can find something that works better, and I spent the last year trying to figure out how to let my winners run. And every single time I've done that, my count has gone to 0. I've blown it up. And I will tell you, the first 6 months, I traded penny stocks. It was the same way. I kept trying to catch the big move, That last 6 months that I traded it was like a year I traded penny stocks. And every time I sat down and focused on consistent wins, locking them in, not trying to like capture the big move every time, right? Every time I did that, my account grew. And it only grew, it grew exponentially, you know? I got my $6,000 I lost back, plus I doubled that, you know? That's worked for me. So far, this, you know, not capping my winners hasn't worked for me, right? You know, and the thing that and it comes down, and this, I'll tell you what it comes down to. It comes down to hogs get fucking slaughtered, okay? That's what happens, especially in options. If you want to go back, take this chart behind me and go look at the 30-minute chart, right? How many people, you know, can we pull up the 30-minute chart on things that happen on the chart as I take a trade that tell me whether or not that trade's going to happen or going to fail or not? I'm not, and again, a little of that too is because I haven't figured out, you know, there's guys out there who would say, well, you're holding this level, so you hold your position, right? Until it breaks a certain level, you know, and you can't, this is, and doing, like, especially with options, I haven't seen where that works, right? Because, I haven't seen where that works because one, this here, when it does this, it kills the extrinsic value of your contract, right? I don't want to get caught in the trap where my extrinsic value is going to get clipped, right? And especially when you're trading zero DTEs, you know, when you're the same day expirations, you really don't want that. So again, I think you're a lot better off. Again, once I get the account back over $1,000, we might see, but there might be some changes that come with that. But you know, I will tell you, in a year, if I've managed to maintain 3% of growth every day, you know, I should be back up there. I should be, you know, $5,000 or $6,000 in this trading account and really able to actually start doing something. So that's really kind of what I'm thinking. All right, I'm going to go through. We're going to look at tomorrow. We're going to do context for tomorrow. We're going to jump in here to the daily. Okay, again, we're going through this to establish context for the market. This is not technical analysis on how to trade this. I'm not giving you a trade setup here, okay? We're just looking at this. You got to keep in mind, okay, this is not one computer, right? This chart isn't an NPC, okay? It's not you versus one. All of these candles in here are millions of people making decisions, and the candle is only a record of those decisions that they made. Now, it can indicate what's happened in the past, can give us some foreshadowing to what's happening in the future. But those things happen at different places and different times on the chart, and they mean different things on the chart. You know, a head and shoulders pattern up here is different than a head and shoulders pattern down here. They're going to have different sets of meaning. Okay, one might be seen as a head and shoulders. Another might be seen as something like a bullish rectangle. You know, there's different sorts of things within that. So what we want to do going into tomorrow, or especially into tomorrow was the last trading day of the year, is we're going to look at our context. Okay, you know, go ahead, look at your volume. And something I want to say to somebody who said that volume doesn't matter. Not as much. You're right. It doesn't really matter that much on the indexes. If you're trading penny stocks, volume is huge, right? And it does matter. It absolutely does. And because there's a correlation between price action and volume, right? You're looking at price action if you're watching the tape trading penny stocks. Here, it's not going to matter so much. The order flow is more important than volume, but volume does matter, and volume can point towards some stuff. So you got some volume coming in today relative to yesterday, a little bit better. You're up today, you're green today, and so, but here you are, okay? You are trending downward, lower highs, lower lows. I don't think this one got over this one. So yeah, I think lower highs, lower lows. So you're still in a downtrend. Your momentum is still, you're oversold here. Calling this to say it's embedded or it's going to stay embedded, we'll see. You can't tell until tomorrow if this thing stays under 20 tomorrow, I guarantee you that like if we do have a lot of market participation tomorrow, they'll probably be trying to sell this back down. I would say that that's probably what they're going to be gunning for. You might get a move all the way up to the 100, but you're also getting the 18-day crossover. Okay, the 18 crossing over the 100. This is a death cross. Looking for probably a move in the southern direction eventually. You might get some more short covering tomorrow, but and again, a lot of this is for context. Your trade is your trade, right? Your setup is your setup, and none of this is going to really affect your setup other than a bit of context to it. Okay, so by the way, we didn't even talk about the unemployment numbers. They're up 9,000 from last week. So might be starting to move. Things are moving in the favor of whatever the Fed is, but that wasn't really what I want to talk about too much today. Okay, so trend is down. Bias is still down. Momentum is, I'm calling it oversold. I'm not going to say that's embedded, but if we wake up tomorrow and we gap down or we're down, then it will be basically guaranteed embedded, and they will be trying to short this bad baby back into the depths from which it came. So that, as far as I'm concerned, is the context goes. Anyway, that's going to do it for me today. Thanks for watching. Appreciate you guys in the comment section. Please feel free to cut up anything I do. Tell me I'm an idiot. Tell me I'm stupid. I don't mind. That's fine. I'd like to have a nice conversation and an argument around this whole thing. And again, if you have something, make a video, share it with me. I would love to watch it. If you know something more than I do, I'm feel free. Let's engage. But anyway, Russell Journal, written, edited, hosted by me, Russel Liss. We are produced by Social Media Shows. And our executive producer, Maria Pureza. So by all means, if you are interested in a show like this, hit them up. They can help you out. And until tomorrow, pretend I said some sort of catchphrase, I guess.